correct?
I know you've never heard me say this before.
Never, ever, I'm sure.
Growth solves a lot of problems.
Yes, it does.
Okay? Growth solves employment problems. Growth solves corporate and business problems. Growth solves budget deficit and debt problems. You know, growth is absolutely essential. If you listen to the president talk, he says this all the time. Growth, growth, growth. And I'm delighted that he has that.
We had good growth last year, but tax revenues inbound did not grow. Pretty flat.
Well, actually, overall, I think overall,
you'd expect them to grow.
Tax revenues were, I believe they were positive. I may be wrong about it.
0.4% or something.
Corporate tax revenues fell because of the immediate impact. However, we will see those tax revenues start picking up as a consequence of the better growth. You have to take a cash hit initially, but the incentive effect is growing the economy. This is a supply-side driven economy. This is not aggregate demand. This is not one-time tax rebates. People say it's a sugar high and that's it. Nonsense. We lowered marginal tax rates for everybody across the board. The biggest ones were for business, long overdue to make us competitive, both large and small companies. Now, that process of re-incentivizing the economy, that process is going to go on for many years. Remember, think of this way. The big companies take a while to turn around their long-term investment plans. Now, we had a good start in 2018. A lot of people anticipated it in late 2017. I don't think that process is finished.
No, and the expensing provisions don't disappear.
That's correct.
Either.
Corporate tax rate doesn't disappear. And we're also seeing a phenomenal increase in repatriated overseas revenues and profits. That's one of the...
But not $4 trillion.
Well, hang on a second. I was just looking at some of those numbers.
It's a lot.
On a cash basis, I think the Joint Tax Committee estimated year one we might get $100 billion or so. We're getting like $750 billion and still rolling. So that's another sleeper factor. All I'm saying is we want open that throttle. Open that throttle. Don't close. There's no inflation going on here.
Let me just close the loop, Larry.
More people
on the Fed.
And one last point. This is coming from the supply side.
Yeah.
All right. More people working at higher wages with higher productivity. One of the benefits here, one of the knock-on benefits is productivity is close to 2%. More people working more efficiently at higher wages is a terrific thing.
So let me just close the loop on the Fed here before.
And the Federal Reserve should not tighten just because of prosperity.
So how unhappy is the president with Chair Powell at this rate?
Well, look, he's had his views on Chair Powell. They had dinner together. I couldn't make the dinner. He's our chairman. We're not going to displace him, things of that sort. So I don't want to get into any of the personalities.
Is he unhappy with the Treasury Secretary as a result of all this?
Stephen Mnuchin has been a terrific Treasury Secretary, one of the president's closest advisors and friends. So the answer to that is, I believe, no.
Larry, I want to ask you about that 50 basis point cut again, because the markets, as you had mentioned yourself, so fixated on the inversion of the yield curve, especially when it comes to the 10s and bills, 3 months. You cut 50 basis points and that inversion goes even deeper. Are you saying it doesn't?
Deeper?
I mean,
I think you go positive. Now, you know, immediately this and that, I'm not here to talk. That's the Fed's job, okay?
So you think the 10-year will hold on to the yield and will only move the short end?
Well, I think so. I mean, and I might be wrong on this, okay? But look, globally, bond rates are so low. You know, big countries like Germany, where are they? Zero, negative bond rates. And I think that's had a big impact on our market. So, again, there's no panic here. There's no emergency. But when you see an inversion, that's an old model, New York Fed model. It says a year ahead, you got to start worrying about a downturn. We're not there yet. We're not a year ahead. But it's something you have to watch. I believe in watching market price indicators, and that's one of them. And again, the big surprise, I guess, to many people, not so much myself, but this is supply-side tax cut and a supply-side economy. So you're producing more investment, more capital formation, more goods, and more jobs. That is not inflationary. So therefore, you have to kind of recalibrate your thinking about interest rates. But it is up to the Fed. I'm not here to criticize Fed. I'm just saying this is our point of view.